Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the morning call on what should be a really quiet Friday morning here in the market. I just walked through the trading floor to get here to the studio, and it's like a ghost town out there. Not a lot of traders at their desks, which is what I anticipate today across trading floors across the world, because the Friday before a holiday weekend, especially late summer, is often a really slow time in the market, as most of you probably know. So if you're a short-term trader, I think definitely today is the day to sit on your hands and not take too much risk. Then you combine that with the fact that we have all this headline risk right now with Syria potentially intensifying over the weekend with potential military intervention over there. It really just is a recipe for not taking too much risk, especially into this weekend, because UN inspectors are leaving on Saturday, and that's sort of the deadline. We might do something after Saturday once those inspectors are gone. So with the market being closed on Sunday and Monday, there is the potential for some explosive headlines over the weekend, no pun intended. I'm not a military expert, or I don't have any connections within the White House, but that's definitely something that you should be weary of. And I think the market over the last 2 days has shown a little bit, you wouldn't say it's shown jitters because it's actually been up the last 2 days, but it's shown no power, which basically tells me that no one's really comfortable taking new risk into this weekend, and I don't anticipate anybody taking any risk today into the weekend, so I don't anticipate much volatility, at least much upside in the market today. I don't anticipate a ton of downside because I don't think there will be a lot of headlines coming through today, but in general I think it'll be the definition of a summer chop fest, and the fact that there's no traders sitting at their desks right now I think is evidence of that. And I think you should take a cue from them and maybe start your long weekend a little bit early and enjoy some nice weather. But we'll take a look at the chart of the spiders just to give you a visual of the last couple days. Like I said, we have gotten a bounce back the last 2 days. We've finished higher, but on both days it looked like we were headed for somewhat impressive gains, but then we closed off the highs to negate a lot of the strength of those moves. Yesterday you can see really impressive move early to break above this pivot and enter the gap from Tuesday, but closed well off the highs just here above the 100-day moving average. So that'll be a level that traders will be watching. And then obviously the pivot here from Wednesday. So really short-term levels are what you should be watching right now, because you should be taking the market day to day based on the fact that there's all this headline risk, stuff like that. But in general, despite the fact that the market's been quiet, like we've seen all summer, there's been great movement in individual names, and that's highlighted a lot in tech right now. The NASDAQ has generally been outperforming, and our group of go-to tech stocks that we've been highlighting on our Off the Charts newsletter, in morning calls and daily recaps, in the virtual trading floor, those are the stocks that continue to move really well. And you saw more of that yesterday. You take a look at the chart of Facebook. This is one that we talked a lot about, looking to buy on dips. It really changed character over this earnings gap and go to the upside, held the 50% retracement of the post-earnings move, and then on a dip back into the previous breakout level, it got another nice bounce the last 2 days to close near all-time or near 52-week highs again. So really nice, impressive action in Facebook, and it's one that I would continue to trust on dips. You have to, if you like a stock and you're looking for opportunities to get in, and you're asking for a dip, and that dip comes, you have to be confident and have the conviction to step in and play it. And this was an example of a nice. It happened in 1 day. This pullback into the prior breakout level, which it gave you a little bit of concern to see it drop more than 4% in 1 day, is what Facebook did here on Wednesday. But then you got to pull back into a technical level, and we got a nice bounce off of there. So really nice move there for Facebook. Another one, Baidu, has really jumped back on the front of traders' watch lists and onto their radars after the most recent earnings. And you saw a gap up on that earnings. The day after earnings was a little bit volatile, but then we ended up trading higher off of that, which tells you there's commitment to the upside, which is healthy action, what we like to see. And then you've seen sort of a base form at upper levels here with no real big pullback despite some market turmoil. So that's really a nice action in Baidu. It held the 21-day, it's back above the 8-day with this 2-day rally. And then above this pivot right here, the first one, you could use this bar's high at 142.35. And then you could look here at 143.12. Those are areas that I think traders will be watching. If the market does keep its footing, keep its composure, and this serious stuff doesn't boil over to the point that it affects the market too much, I think Baidu could be one of the first ones that people look for upside momentum. Look at GMCR. This is one that has a huge short interest, and those stocks in 2013 have been incredibly strong. This is another one just like I was talking about with Baidu, an earnings gap up, commitment to the upside after the earnings. It has been a wide upper level base that's formed. Some people, last time I talked about GMCR, I characterized this base as a base, and they were saying, oh wow, it's a 10-point base. That's pretty wide, but you have to take it all in perspective and look at what time frame you're operating on. You go back and look at a weekly chart, for example. You can see a nice upper level base here. It's come all the way from $20, so a little consolidation up here, really healthy after quadrupling. And this is one that is broken out of that upper level base and looks like it could have more upside. And then you have on a daily chart, you can see the breakout here. This one might be a little bit extended in the short term. Maybe you wait for a pullback or wait for the 8-day moving average to play catch up. But it's another one that if the market can find its footing, keep its composure despite all the headlines, I think GMCR is one that people will have on the front of their watch list heading into the next couple weeks. Tesla's a little bit different than the rest of the group that I'm talking about this morning, because Tesla has been holding up incredibly well. You can't complain with any of the action that you've seen in Tesla. Obviously, the 8-day is playing a little bit of catch up as it's resting at upper levels, but it's one that it feels a little bit tired. Like I said, there hasn't been anything really concerning about it, but you got a big tail here. It did respond pretty well the next day to finish positive, and then opened higher on Wednesday, and then traded back down, a little bit lethargic type action in an intraday tape that was relatively constructive for the market. Yesterday it was able to bounce a little bit after a gap down, but in general it feels like it's running out a little bit of steam. There are still a lot of shorts in it. If it does form another upper level base, yes, it could potentially go again, but it's one that I think a lot of people right now are looking for two-way action and are taking it very short term, because the stock has come a really long way. Despite the fact that it does have a lot of short interest still, I think it just feels like it's run out of a little bit of momentum, and you'd be best served to take a short-term approach, look at short-term pivots, and trade it in both directions. I think there will continue to be volatility, but maybe some two-way action there. Netflix, absolutely outstanding performer, on par with Facebook in terms of its performance, and something like GMCR, maybe even better than all those considering the run that it's been on. We'll go and look at the weekly chart to give you some perspective. This is one that since bottoming out near the $60 level, has obviously had a huge move, and it's been fueled by a lot of really nice earnings reports. And what you've seen is this was an earnings gap up in a base, which was a great opportunity to enter after some rest and after moving averages played catch up. And you had another earnings gap up, another base, and you had another break. This was listed as Mark Sperling's first trade idea of the week and gave a really nice move out of one of these upper level bases, and it has continued higher. Absolutely strong as an ox, if that's even a saying. But as you can see, it's also a little bit extended in the short term like GMCR. I would maybe wait for the 8-day to play catch up. Today is not a day that I'd be looking to chase these stocks, but what I'm trying to convey is that these are the types of stocks that you should be putting on your shopping list for when the market does dip. This serious stuff could lead to a little bit more of a pullback. We could get military action intensifying over the weekend or next week that could cause panic to come back into the market. But you have to have a level head during pullbacks. And like I said, have a shopping list that you're ready to pull the trigger on when they come into key levels. There was a lot of fear mongering in the middle of this week. We tried the best we could to talk people off the ledge a little bit, explain that yes, there is headline risk, but the market goes down because of fear. Oftentimes the anticipation of things like airstrikes in Syria or military action, the anticipation of those events causes more downside than the actual result of the event. It's sort of like a sell the anticipation, buy the news type of thing you see a lot of times with military action, and I wouldn't rule out the possibility of that if we get a little bit more downside next week, which based on the lack of power this week it seems possible. But there's a lot of things to work through from a geopolitical perspective with that situation. But like I said, have a shopping list, have levels that you're looking for, and be ready and have the conviction and confidence to strike when those stocks reach those levels. The last one in this group I'll talk about is LinkedIn. LinkedIn, just another outstanding performer, held up really well despite some of this market weakness. In the upper level of this upper level base, if you want to call it a base, it did breach it briefly, but did hold the 21-day moving average as it held just about 50% of this gap, which is sort of the line in the sand for composure. You're talking about Fibonacci retracement levels. LinkedIn, just another great performer. Not quite as extended as something like GMCR, LinkedIn, or Netflix. So maybe this is one that you could, if you wanted to be chasing something today, this is something that could be on your radar for more upside. It maybe has a little bit more room. the juice hasn't been as squeezed out of it as some of the other ones with their recent moves. And just a couple other things I'll talk about. GLD this morning is down again. It's one that we talked about, feeling like it was a little bit tired after this gap up and this 2 days of action. And then yesterday you got the gap down, and then you're going to get another gap down this morning. We can take a look at the 5-minute pre-market chart to see where it is. It's 134.76 right now. I know it's down a little bit more than 1%. So you can see a nice gap down here this morning in gold. I think the move higher in gold has been somewhat peculiar to me because most people are expecting QE tapering in September. Yes, there has been a little bit of panic because of the Syria stuff. There's a flight to safety, all the narratives on gold. Yes, it was highly oversold and has had a snapback just based on that. But a 20% move off the lows was not really what I was expecting to see in gold heading into what most people expect to be QE tapering in September. So I think there could be some jitters and anxiety from gold bulls heading into that September Fed rate decision, as expectations, like I said, still are that they will begin tapering of QE. They'll maybe set out a schedule for winding down all of QE sometime in 2014. But not surprising to see a little bit of downside in gold after that really strong move. And now you just have to watch some of the moving averages to see how they hold. We're back down near the 8-day. You go back and take a look at the chart. We're back down near the 8-day moving average on gold here. And then the 21-day could come into play if we get more downside. It also coincides with this previous base that had formed, also the previous breakdown level, which now could become a little bit of support after we reclaimed it. But just something to keep an eye on. It's not something that's easy to trade intraday. Gold trades all night, and pit trading closes at 1, so sometimes moves after that. Sometimes people don't understand the dynamics of gold, and you can't day trade it. You can't trade it like a stock. But something to keep an eye on. And if you're going to trade it, take more of a swing type of approach. And I think it could get more downside heading into that September Fed rate decision, like I said. And oil is an interesting case because you did get that move higher in oil after John Kerry came out and said, Syria used chemical weapons. We're going to probably have to take action from a moral standpoint. And you had that nice 2-day move in oil, but then you saw a really harsh down move yesterday as some of the anxiety over Syria wanes a little bit. But it really is just retesting this prior breakout level. Oil was about flat overnight. So something really interesting to keep an eye on will be the USO, which loosely tracks the price of crude oil, so the United States Oil Fund. Just something that'll be interesting to watch as the Middle East tensions maybe unfold. And 2 names in the oil service sector that we highlighted and off the charts that look like they have constructive patterns but were a little bit weak yesterday. Schlumberger, which has a really interesting chart pattern to me. You go back to the monthly chart, you can see it's sort of breaking out of a long-term lower level base here that's been in place for about 2 years. You go back to the daily, you can see on a daily chart it has a nice gap up and consolidation, which is a constructive pattern that we like to see. Yesterday's action obviously was not very constructive if you were looking to get involved to the long side, but maybe it provides a more calculated low risk area to get involved with your stops at the low end of this range looking for a breakout. So if we do get more fear that comes into play regarding oil, regarding Syria next week, Schlumberger, it's a mouthful, could be one that gets going. The other one that we liked in this group is EOG Natural Resources. It's been stronger this year than Schlumberger, and Schlumberger has a little bit more of a calculated pattern, I would say. But based on the strength we've seen in EOG, it wouldn't be surprising to see it maybe get a little bit more power earlier. But the pattern isn't quite as clean. We got a nice break. This was the really compelling pattern, was this descending channel that we got a breakout of over the last week and a half. But like all the other oil servicers yesterday, it was weak, came back down into the 8-day moving average. But I would watch the pivot from Wednesday's high, which was 161.32, and then also this pivot here, which is 161.47. So that's the area to watch. In addition, you could maybe watch yesterday's high as a short-term level. But those are just 2 names in the oil service sector that if we do get more panic regarding oil, regarding Syria, those are the 2 best patterns that we were able to identify in that group. But that'll about do it for today's morning call. Like I said, I think you'd be best served to sit on your hands, not take on any new risk today. If you are going to trade, the morning might be a little bit more active than the rest of the day, and I think volume will continue to dry up throughout the session. And everybody enjoy their holiday weekend. The last real weekend of summer, I think it's a good time to go out and enjoy yourself a little bit outdoors. Scott's not in the office today. Mark's been out all week. Take the cue from those guys that this is not the type of action that you want to take a lot of aggressive moves in. But this has been your Editor-in-Chief, John Darsie, here for the morning call. And we'll see you out here for the daily recap, and then we'll see you after the holiday weekend.